Good morning, everyone. What I'm going to be doing is a quick presentation, probably about 20 minutes, with some live trading on Eurodollar packs and pack spreads and pack flies. Right. So this is my screen. Okay. So hopefully you can see it nice and clearly. Every time I make these presentations, I adjust my screen so that the correct products are being viewed. So let me just talk about. What are pack spreads and pack flies, right? So in the US, so this, I hope you can see this Excel, right? So in the US, the liquidity and the way in which trading is done by mortgage companies, the banks over the years is that the people will trade, instead of a single outright future, they will trade a strip or a strip, a set of contracts. So they will trade a pack. So a pack, I want to hear a pack here, a red pack from the June 17 to March 18 is where you buy or sell one of each of the contracts, right? And then you just buy one and you get one, long one, long one, long one, long one, right? In the green pack, this is June 18, Sep 18, Dec 18, March 19, right? So if you wanted to sell the green pack, you would sell just one lot and it would give you one lot short in all the contracts, right? So slightly different to what you're used to trading. However, and to make it just a little bit more complicated, these aren't traded in price, okay? So what they do is they trade everything from a net change from previous settlement. So what is net change? Well, we know what previous settlement. So yesterday's settlement. So what we do, we'll look at yesterday's settlement. So what I've got here is the settlements last night at 8 p.m. London of the June 17 all the way out to March 20. These are the settles, right? And this is where they're trading last, right? Now this is this is very important, right? So these are the last trades in the outrights, 98, 96, up one, diff up one. What this doesn't tell you is, did it trade on the bid or did it trade on the offer, right? So that's really important. We know bid asks, so they're very important in the way we do business. So I've listed all these settlements. So a pack will be quoted in, this is just the difference. So a pack, so the red pack would be quoted, add up all these differences from yesterday's settles, and then that will give you you add them all up, the sum, and then divide by 4, right? So in this instance, the red pack price in net change will be up 1 1/3, right? So up one and a little bit, right? So the price, without looking at the pack spread, will be around 1 to 1 1/4, right? That would be the price. The greens are slightly different because it could be where they settled. These are up 1.5, 1.5, each of the outrights, up 1, up 1. And if you go to the blues, up 1.5, up 1.5, up 1.5, 1.5. So if you look at the blues will be trading around up 1.5. The greens will be trading around up 1 1/4, and the reds slightly less, right? Just think about what I just described there. If you think about, okay, if the greens are trading up 1 1/4 and the blues average are trading up 1.5, up 1 1/4 minus up 1.5, which is the average of each of the green pack and the blue pack, that will give you a price of around down 1/4, right? So what does that actually mean, right? So what I've done here, let's get rid of that. What I've done here is said, right, so the current price, so M7, M8, which is the June 17, June 18, the current price is 20. So I've literally got the last price of the June 17 minus the last price of the June 18. So that will be your 1 year calendar spread from June 17, June 18. The Sep 17, Sep 18, same thing, price of 20, Dec 17, Dec 18, price of 27. March 18, March 19, price of 26. Now, what I've done here, so that's just the absolute price. Here I've done is on a net change basis. What is the difference on the day of the June 17 to June 18 spread? Again, you just do the net change, the difference. So you did the June 17 here where my mouse is, minus the June 18. That gives you a net change of down half. So if you go down the curve, you've actually got the curve, the June 17, June 18 is trading down a half. Sep 17, Sep 18 down half. The Dec 17, Dec 18, and March 18, March 19, well, that's trading unchanged. And this one is slightly up, right? Because it could have been a slightly low settle last night, right? So if you then add up the net change of these changes on the day, the current price is down a quarter bid at evens, right? That will, and what does that translate into? That translates into the fact that if you then, I'm going to bring over this here, what you can see, these are the current, I mean, this was done half an hour ago. I don't think much has changed in terms of the curve since I made these slides. But if you look here, you can see unchanged, net change is 27, mid price there, it's unchanged. The net change 27, that's on the offer. So actually it's really somewhere in the middle. A volume weighted average price will be about 26.8. 26.5 is up half. So obviously there was a low settle on the Dec 17, Dec 18. And then you've got this one here is trading, the net change here is 26 bid of 26.5, right? So they are the one, again, the timing of these spreads. But the point is, let me sort that out again. This is live telly, so I apologise. All the while the pack spread is down a quarter bid at even, and in a minute I'll show you the price. Let's look at that price now. The down a quarter bid at even in the pack spread between June 17, actually now it's June 17, June 18 is now even bid at quarter, right? So it's gone up a fraction, okay, with the sell-off in the treasuries. So even with with what, as traders, we kind of were hoping that we get given on the bid or something, but in reality, if the pack spread is even bid at up a quarter, there is no cat and mouse chance that you're going to be able to be really given on the bid of these 26.5s, unless if the price stays the same here at even bid at a quarter. If this goes up and that stays the same, if this price goes, this steepens up by half a tick to trade 26.5s, while this price stays the same, yes, you could get given 26.5s on the bid, but it's highly unlikely. So, right, so what we talked about, what are packs? So packs are a strip of Eurodollars. They trade, people, the end users trade them. I mean, it's European morning, so it's very quiet. But the end users will trade them because they want to capture a 1 year period of curve or 1 year period of outrights, and they want to trade that in one trade, right? So it's a very powerful tool. If you imagine a pack, you can buy, if you buy 100, you can actually buy 400 outrights in just one click, in each of the outrights. If you want to buy a pack spread, you can buy 100. You can actually buy 4 lots of 100 1-year calendar spreads. So you can buy, in this instance, you can buy 100 June 17, June 18, Sep 17, Sep 18, 100 Dec 17, Dec 18, and 100 March 18, March 19 in one click, right? So these are very powerful tools. Okay. This is here. So this is my page, right? So this is the June 17. I'll open it up so you can see it. June 17, June 18. So that's essentially your reds to your greens. June 18, June 19. That's your greens to your blues. June 19, June 20. That's your blues to your golds. So greens to your blues, blues to your golds, and this is your golds to your purples. June 20, June 21. You still see, right? So there's still quite decent liquidity in these back month spreads. In the afternoons in US trading, this will be like 800 lots up, quarter tick wide. So very tight pricing. Okay, so what about here? So these are your pack spreads. So they're your 1 year calendar spreads. These are your pack flies. So your pack fly is buying, let's go back to that Excel. A pack spread is buying, say the reds and selling the greens. So you're buying, your long 36 3 months, long 16 3-month spreads. If you buy reds to blues, so a bigger gap, you're going to be long by buying one lot. You're actually giving yourself an exposure to long 32 3-month spreads, and then that's from the short side. A pack fly is where you buy one pack spread and sell the next pack spread. So you've actually your flat 3-month spreads, but you've got a curve exposure long the reds, short the greens, long the blues, or whatever part of the curve you trade. So these are the pack flies. These trade less than the pack spreads themselves, but they're still nonetheless they're good trades, right? So again, this is my pack spread. So I could look at the outrights of the Eurodollars, but what I actually prefer to do is I will look at the treasury curve. These are highly correlated to the movements in the Eurodollars pack spreads, and certainly the Eurodollar calendars, the Eurodollar calendar spreads that you trade, the Eurodollar butterflies and condors that you trade down the curve. So here I've got 2's 5 spread. That's basically trading even, so unchanged on the day from yesterday. 2's 10s I've got unchanged here. I've got the 5's 10 spread, which is even bid at up a quarter, so really around evens. You've got your 10s to 10s, the 10s to ultra 10s, that's down half, up even. Very flat curve, right? So this really is a quiet move. 10s, 30s, so back end of the curve, even bid at up half. And then the very back end of the curve, so the ultra 10-year note to the 30-year is up half, up 1. So what you've got, these are my correlations. This is what I look at to help me make decisions. So which parts of the curve do I look at? So this is where my mouse is here. This is reds to greens. I'll be looking at the 2's 5-year spread and 2's 10-year spread, perhaps just a little bit on the 5's 10s, but mainly 2's 10s, 2's 5s, 2's 10s year spread. So they're both unchanged, right? So as you can see here, so let's put an offer in here. Let's do 2 lots. It's not GTC. I'm joining the offer here, right? These are unchanged. If these go bid, I might want to go bid here, right? So let's see. That's the first trade. And this is live. Right, so the 5's 10s spread and 10s, so right, 10s. Okay, so let me explain all this. So 5-year note, 10-year note future. So the TY, or the 10-year note future that you guys look at, is actually a 7-year cheapest to deliver bond, right? So maybe a little bit complicated. So it's a 7-year bond. And this is a 5-year is really about a 4-year bond, right? So really this is 4-year to 7-year, but because the products are called 5-year to 10-year, but it's really a 4-year to 7-year. This is your 10-year note to 10-year, ultra 10-year. 10-year note, I just said, is 7 years. The ultra 10-year note is actually a real 10 years. So with these two spreads here, what we can see is we've got the capture of the curve between the 4-year and the 10-year. Right now, there's not a lot happening. We've got basically the 5s, 10s, the old 5s, 10s trading up a quarter, and the new like 7s, 10s really, somewhere down a quarter. These move in half ticks, right? So really the curve's flat. So you look here. So I'm going to use that information in this. So the June 18, June 19, and June 19, June 20. So this is your greens to blues pack spread, but my mouse is quivering. And this is your greens to blues and blues to golds pack spread. No surprise, unchanged, right? So right now I'm short the curve. So I'm not gonna, and while there's nothing to do, unless this goes unchanged offered and this goes down half offered, I won't come in here with an offer at even. I'm going to wait, right? But in the meanwhile, I'm looking to get given the bid here. And then right at the back end of the curve, so you've got the 10-year, this is the 10-year, 30-year note, and then you've got the ultra 30-year note. So you've got basically a 7-year to the 30-year bond, and you've got the real 10-year to the 30. So right at the back end of the curve. This is slightly steeper, right? So you can see here, maybe I could, it's trading around here. For argument's sake, let's put a bid in here. She's, I'm not convinced really about this bid and this evens. But what would, I think it's, I'm going to put it, right, so, but I definitely, I definitely want to be offered here, and I'll offer one here because I see that this is even bid at half, this is trading evens. If someone lifts me up a quarter here in these golds purples, I think I'm okay, right? So what I could do is look to bid some evens here, or hopefully squeeze out and buy some quarters. Very much the same trades that you're doing in your trades in the curve, right? It's really important that it's a replication, right? So what I've been doing with some of these presentations is I have tried to record some activity, and of course I can't generate volatility in the market. So I'm sitting here, we're going to sit here and I'm going to talk through what's going to make me change those orders that I've got in. So right now, let's go 1, 2, 3. Let's offer that. Why am I offering that? 1, 2, 3. I'm offering because these curves are trading. See, look, 5s, 10s has now gone quarter bid. So 5s, 10s is, now it's gone again. So that would have made me bid here at evens. See, right, what's happening here? The reds to greens, that traded on the quarters, the reds to greens. This isn't steeper. This isn't steeper, but this went slightly steeper. So the 5s, 10s. So that's why people have come on the bid here at even, because this traded up. So let's join them. It's exactly the same trading as you're going to be trading, right? So it's all about continue to look at the market, reevaluate your orders, continue reevaluating your orders. Am I working the right orders? Am I working the right orders? If you continue to reevaluate and look at your order book, all right, am I working the right orders? Because remember, you are in charge of those orders. If someone comes and sweeps the book and you're working an order that you don't want, that is your fault, right? So in terms of you're managing those books. So right now, I know that this particular offer here at up quarters isn't brilliant because this 5s, 10s is trading up a quarter. If this offer here in this 10s, the 10-year alternate 10 goes offered a little bit more, I might have a little bit more confidence in this offer. If you notice, these offers have thinned out a little bit. So I'm really now just waiting to see what the next move in the market is. Now, let's talk about my positions I've got on. So I'm actually short the pack fly here. extended pack fly. I've had it for a few days. I've been jobbing in and out of the market, so using these types of techniques to okay, so that part's the curves offered. I'm going to join in the offer as well, trying to add and subtract some edge from the trade. So what I might do here is I'm getting a little bit less confident. Oh no, I'm going to stay. I'm going to stay. I was getting a little bit nervous about offering these quarters, but I'll stay there. Remember, let's go over to here. These are the reds 1 year spreads, right? So the front red, second red, third red, fourth red, 1 year spreads. Now, this is trading unchanged on the 27s. This 27s is nothing there. This is up half, right? So 26 and a halves, and 26 is on the bid. So if I sell upper quarters, what is that? Well, upper quarters will be the average of, I'll be selling some 27s, I'll be selling some 27s in the mid price, I'll be selling the offer of this 26 and a halves, and I'll be selling the bid of these 26s. When you think of it like that, selling quarters is quite rubbish. So I'm going to put it. And that's how you evaluate what the spread is, right? So evens. What is evens? So evens, if I buy evens here, that would be me buying the 27s, me buying the mid price of this 1 year spread, me buying the offer of this spread, and me buying a potential edge here on the 26s. And the good thing about the pack spreads is you don't, if you get in there quite early, you generally are not fighting massive book queues, right? So if you look at this, right, 26 and a half bid is bid for 17,500, and that's small for Eurodollars, right? Now, if I needed to buy 26 and a halves, it's going to be nigh on impossible for me to do it in my size without over queuing. However, you could actually generate that same spread. You could bid the pack spread down a quarters, and you get people actually crossing those bid asks. Yes, there are arbitrages between these two markets, but essentially there are people who trade these pack spreads that aren't trading in the actual outrights. Okay, so what I've done here is pulled over my greens, blues, 1 year spreads. So I'm basically down a quarter, up a quarter. What does that mean? So if I buy in this, the June 18, June 19 pack spread. So June 18, June 19 pack spread is essentially, if I buy down a quarters, that's me buying 25 and a halves here, 26s, 25 and a halves, 26s, and the mid price here at 26. So that's a good price. Well, that's why I'm not getting them, okay? But what you can see here is that I'm in there early, and there's every chance that I could actually get someone cross 16 lots, 25 lots, but there's next to no chance of me actually buying these spreads while they're bid for this sort of size. Okay, so yes, the market could turn, etc., and someone could hit a big price and sell it. However, these pack spreads enable you essentially to get in the front of the queue. So at all times, I'm looking, reevaluating, is down a quarter good on the bid? I'm in there early. I got in there early this morning. Is my upper quarter offer good? Is my upper quarter offer here good? And I'm continually evaluating is that an edge for me to buy in the spread? Then I'm reevaluating what's going on in the curve. You remember what I said, that this went bid, the upper quarters in the 5s, 10s, it's now offered, right? So if I see this start to trade evens and this start to trade down halves, I'm going to go on the offer here at evens because I want to get front of the queue. There's a high probability of getting your bid or ask crossed if you get in there early, right? So now I'm just going to reevaluate. So I've looked at the curve. 2s 10s is still trading evens. This is trading evens. 2s 5s, 2s 10s, they're trading unchanged. So, you know, I don't think it's a great bid this evens. I'm more trying to show you how to get some opportunity. So what I'm going to do is I'm going to delete that. I've deleted my bid. But what I'm going to do is look here and reevaluate. How is the curve? What's the curve doing? Unchanged, unchanged. Upper quarter offered, even bid, but trading. See, this has come flatter. So these back curves have come a little bit flatter. So I'm going to go even offered. Even offered in these golds, purples. Okay, why am I doing that? You might ask. Because I can see this is offered at the back end of the curve. So I'm looking, what's helping me look at this? Now, I might not get them now. As you see, he's pulled. I might not get them now, but what I will be front of the queue. And remember when I showed you this? If I sell 1 golds, purples, here, short 1, or reds, greens, I'm actually selling 16 3-month spreads, right? So not only am I selling quite a lot of 3-month spreads, there's an edge. So what is my edge here? Look at these back spreads, right? So he's down a quarter, fine. That doesn't scare me. What I'm looking for is to get in the queue in a good place, right? So I think I've got a good order here. The curve is flatter where my mouse is, 10s, 30s. The ultra 10s to 30s, that's still around unched. So let's see. Nothing moving. I may well pull it, right? But that's part of what we do. We're looking to pull orders. We're looking to get good queue. Is it good order? No. Then we're going to pull it, right? So, but if it's a good order, we keep it in the book, and we keep in there. And now, because these are FIFO, actually what happens, these are FIFO orders, so you get front of the queue, which is unlike Eurodollars, if you know, right? So if you get in there front of the queue, you're going to get good queue, because I can't imagine many of you trading over 50 of the pack spreads, given the size of these trades, of the actual trade that you inherit by buying or selling it. So I'm even here. This is looking like this is thinning out to evens. He keeps thinning out these down a quarters. I'm oh, he's got to see right. Now that's given me a little bit more confidence. It's gone even offered in the 10s, 30s. That's not a lot, right? This 10s, 30s can move eight half ticks in a day on a big day. So that's not a lot. That's not a big move, 2 or 3 prices. But it's what you're looking for is the momentum, the direction. Where is the direction of that trade at the moment? And that is going to help you. Do I keep my offer in the book here, or do I pull it? Now this comes back even bid, decent size. This comes back even bid, decent size, and this thins out. I will pull my even offer in this golds to purples. Unfortunately, as per normal, nothing is happening in the market. So I'm really talking to myself, and nothing's going on in the market, right? So we'll see. So let's just carry on watching. pulled the offer at evens. I am the bid here in these down the quarters and these pack flies. Generally speaking, these pack flies on a non ECB, a non-farm payroll, a non-FOMC day or CPI, you really max looking at a one full tick, so 4 price movement in these. So they mean revert. Of course, if you buy the spread today, if you buy the spread today here at down a quarters, and tomorrow it's trading upper quarters, it doesn't, because it's on net change, it doesn't mean to say that you're going to make money on the trade, right? It's all against net previous day's settlement. So here, what I saw these. I'm going to put an offer there. 1, 2, 3. I saw these upper quarters trade for 5 lots. I bidded the evens here. Why have I done that? Remember this here. This is the June 17 pack fly, right? So this is the difference between this and this. Well, this is trading upper quarters. This is trading evens. So bidding evens here, that's a good trade. What you can't see is that the 10-year note future, what I'm looking at, is just traded on the downside. So I've just pulled that over for you. But what you can see interesting here is that the 2's 5 year just gone off at it even, which is unusual for which is quite unusual for in a downward move, right? So it could be a precursor that actually there is no momentum on the downside in the treasuries, right? So if you see here, the treasuries even offered normally, and this is even offered in the 2's 10s. Normally, in a downward move, 2's 10s and 2's 5s will go up, right? So much like Schatz Bund will go up when the Bunds go down. So I don't know whether this means the treasuries are at the bottom. Probably it means there's absolutely nothing going on. If you notice here, I'm going to go 1, 2, 3, 4. I'm going to go in the offer there, because look, even though that traded out that pack fly, someone's coming with a 10 lot offer there. I'm at the front of the queue of these upper quarters, which essentially is selling this and buying this, or selling this and buying this. It's all about book queue, right? So it's exactly the same. And like Euribor, like sterling, you know what? Half the time you're just staring at the market. If there's nothing going on, I mean, the 10 years are trading. The 10 years are trading 12, 12 and a half. Half a tick move in the 10 years. So you're going to have very little movement in the big 1 year spreads if the 10-year future is only moving half a tick. So let's see. 2-year note, these spreads have gone back to evens mid price. So I mean, I'm bidding here the evens there. Back end of the curve is offered still. So even if so what I'm thinking here is, look, so if I sell these upper quarters here, remember it's a worst case scenario, I'm thinking a worst case scenario. If I sell upper quarters here in these reds greens pack spread, and I can look at the back of the curve and that's still offered, I know I can probably buy these evens quite easy. 2's 5s, 2's 10s is unchanged on the day. The back end spreads are offered at even. So you know what, selling curve is not a bad thing to do. What would be bad is if these reds greens pack spread, if I saw these 2s 10s start to really motor up and I'm offered a quarter, no, that's bad. You know, you really want to be buying a quarters if you start to see these 2s 10s and 2s 5 spreads going up. What drives that? Well, as you know, as I just talked about, generally speaking, curves, the curve will steepen in a downward move in the 10-year note future. But today is really quiet, so I can't promise anything. I promise I'll try and keep this video going as long as possible, right? So I'm bid here. I bid here on the evens. I think that's an okay trade. I'm at the front of these quarters here, offered in the reds greens. I'm pretty sure I can buy evens because I'm looking at the curve. That's still offered. That's traded on the downside. So if I sell these upper quarters, I think I can buy some evens against it and cover my curve trade, right? So again, I'm probably not going to get much because look, this is coming offered here. 37 lots are coming offered on the upper quarter offer. Okay, so I'm watching, I'm waiting, and it's all quite boring. Okay, but this is stirs trading, right? So there's no getting around it. Stirs trading is boring. The more boring you can make stirs trading, the better. You know, you make it you make it as uninteresting as possible. That's the secret. The superstars in your office, it's gone again, these upper quarters offer. The superstars in your office are not the ones who are, you know, really swinging the bat from the hip. They're the guys who are taking small P&Ls the whole time, right? So as much as, you know, what we read in the books about what traders are doing and the risk taking, it's probably not a very good reflection of reality. In my experience, the guys who take the least risk are the guys, they're the guys that are generally around the longest. So I'm up a quarter offered, I'm even bid, and I'm going to see what happens, right? So I'm going to try and get a trade on for you. Let's see. I mean, like, it's 10 year, and since we've been talking, which is about half an hour now, it's been 12 bid at 12.5. Again, let's reevaluate. Let's look at the curve. 2s 5s, unchanged. 2s 10s, unchanged. 10-year note future, basically unchanged in the whole presentation. 5s 10-year note, so the 4's really 4-year, 7-year. Last was upper quarter, but really he's just taking profit on that. 3 lots is sold, it's evens trading, which is slightly lower. 10s to ultra 10s. 10s to ultra 10s, remember, is 7-year to 10-year. That is even offered. So it's offered at even, so slightly flatter, right? Here you got the 10-year note to the 30-year bond. So really 7-year to 15, 20-year, actually 7-year to 22-year, that's even offered at the lows of the day. Although again, remember, this 10s 30s, or what you also call the knob spread, notes over bonds, can move 8 to 10 prices in a day. Generally, it's 4 prices. So okay, remember that as a rule. This just got low ticked here, and then at the back end of the curve, still, it's actually traded down. It's traded down to down a half today. Which is surprising because in the volatility, but it's really even bid at down. It's up half really trading. So my valuation tells me the front end of the curve, which is like your proxy for your whites to greens, outrights, that's unchanged. 10-year note, unchanged. Middle of the curve, the body of the curve, really even offered. down half trading, tiny, even offered, up half trading a little bit in the tens. So the curve, I think, now look, the front end of the curve has gone even offered. So this is making me think, right, the curve is trying to hold, and it's trying to just push slightly lower. Okay. What I'm not doing is predicting where the curve's going. I'm preferring to let the curve tell me what's going on in the market, right? So we've got lots of orders in. We haven't traded yet. Again, it's very quiet. So we're not trying to engineer risk. What we're trying to do is show you, what I'm trying to do is show you how I would look at the market. And if you follow these, the way I'm looking at this, over and over and over again, there is $10, $20, $30,000 of P&L in Eurodollars to make every day. All right, obviously you need the market to move. And then the beauty of this is it doesn't matter where you're trading, in which part of the curve. That's the beauty, because you can apply the same principles. You could apply this to the whites to the greens, the whites to reds. It doesn't matter which part of the curve you're looking at. It's just the same repetitive story you're looking at. Let's reevaluate. And this is what you're doing. This is what you should be doing as a trader the whole time. And I'm sure you are. 10-year note, unchanged. Let's look at the Treasury futures. 2s, 5s, 2s, 10s, they're even offered, so they're slightly flat, slightly. You've got the 5s, 10s, trading evens, 10s, 10s, so 7-year to 10-year, down half trading tiny, even offer in the 10s, 30s in the knob. And look, this has gone offered, then the bid's thinned out in the back end of the curve. So what does that tell me? That tells me that the curve is slightly trying to flatten. This could only last an hour or so, right? So, but what it is telling you is where the pressure of the curve is right now. So let's carry on. This is slightly offered, the front end of the curve. So I'm looking at this. I'm in the upper quarters. I probably don't want to sell these up 25s in the... Don't want to sell them because I'm actually going to put the same trade on here. So I prefer to do it in a pack fly, just purely because it's a little bit less risk, right? Gives me a little bit more time to manage the position. So I'm even bid on these pack fly here because this is trading quarters, this is trading evens. If this suddenly goes quarter offered for 100, and this is still evens, and this bid thins out, I'll pull my bid, but then on front of the queue of the quarters. Conversely, if this quarter offer disappears, this goes even offer, I'm going to pull my quarter offer here, and I'll be front of the queue of the even bid. So it's just simple trading. Again, this is 10:40. This isn't prime US trading hours, so the market is quiet. Again, let's reevaluate. 10-year note future, half a tick move. I think I can safely say that's boring. And it keeps trading 12s, 12.5s, right? But that's not enough to move our curve. There's nothing coming through on the squawk. So now I'm just sitting there patiently, just waiting for an edge up. Seeing the treasuries tick up, right? So now is that treasuries tick up going to move the curve lower, or is it going to move the curve higher, right? So let's see. Now, if this was Bundlles and Euribors, although the front end of the Euribor has just been really dead, but if this was if this was Bunds and your eyeball and you saw a tick up in Bunds from 12 to 13, or the 10 tick move up, in Bund, you'd probably see the Schatz Bund flatten. So you'd see offers come in here in this 2s, 5s and 2s, 10s. You'd see offers coming in the reds, greens, or whites, reds, upper quarter. And I'd probably think that my bid is not so great. But this isn't European market. This is the US market, where if the outrights go up, sometimes the curve can flatten and sometimes the curve can steepen. Just so you know that we're talking about the same thing. So you have bear and bull flattening, and you have bear and bull steepening. So when you're talking about bear and bull flattening, the bear and the bull is the direction of the outright futures, and then the flattening or the steepening is the direction of the curve. So you can get a outrights up, you can get a flattening in the curve. Outrights down, you can get a flattening in the curve as well. So that's why we have the 4 bear and bull flattening, bear and bull steepening. In the US market, no, actually just seen here the 10-year, like the 7 to 10 year, that's gone off at there, down half. Right, so that's interesting. So we're going to watch here. I mean, I'm short the curve, so I'm looking for a to be given some bids in these down quarters here. The play here in this is really more to get front of the queue, to show you how I would look to manage these positions. So if I get, for instance, if I buy these evens in this pack fly, what I might do, I've got the opportunity to just hold that trade if the curve doesn't flatten, or I could try and leg out of it myself, right? So I could join the front of these quarters to sell against buying these evens here. So I'm going to give myself options, okay? Although at the moment it's very, very quiet. What I'm going to do is I'm going to make this a 1 lot. And I'm going to make this 1 lot. Yeah. Okay, it's all very quiet. Unfortunately, I think it's time to end the video. I will let you know if I've got any fills. Thank you very much.